What's up, everyone? I'm Nick Campo. This is
Big Boss Ben.
Big Boss Ben, and we are
the Lone Guys Podcast.
We have an absolutely awesome episode for you this week. We're going to start out the FHFA admits they screw up, get rid of DTI, LLPA adjustments. We have a little bit of information on one of our lending partners who we thought was trying to steal our client, but stay tuned for that. What else are we talking about? Are we going to talk about how good looking Janet Yellen is? Maybe we'll get into that. We also have somebody trying to steal our employees, and much more. Ben, you have a few surprises for me on this episode as well, huh?
I do.
So what should we start with?
So let's start with the LLPAs, the loan level pricing adjustments. So the FHFA, this is about a week and a half ago, as of this recording now, had decided to adjust them again. And they're actually having a House meeting at the U.S. Congress to discuss the new adjustments to the LLPAs and if they are legal or not.
Are they legal?
I mean, yes, they have every right to make the changes. However, the discussion is, hey, are they getting too involved into politics? Like, the whole reason for these LLPAs are to balance secondary market, balance adjusted risks. Mm-hmm. That are associated with the loan in different buckets. So, I mean, you have different credit score buckets, different LTV buckets. They are not going to be able to get to know every single client like we do as a broker. So what they do on the secondary market is they put you in these different buckets, and that's why people have different rates. There's a different cost for your rate depending on all the criteria. What they've now done is they decided to remove the debt to income ratios from that completely. The reason being is because a lot of people were getting quoted a price that would change after their income was actually looked at and verified.
Hold on. Let's talk a little bit about that. So They were getting quoted the price up front,
yes,
mostly by retail lenders, credit unions, or banks, or the builder's lender.
Right.
And then it would change once you got into process, almost like a bait and switch.
I mean, pretty much so, because they were just going off an application, going off of what someone thought they made without any knowledge of any sort of what underwriting guidelines and what you actually have to treat the income with.
But us here at NBI Financial Group, we don't do that. Right. Even when the DTI was on there, we would quote them their actual rate. And we would run into this all the time, and they would be like, well, how come I got this rate here? Look at this loan estimate. And we're like, because it's not a real rate, and that's also not a real loan estimate most of the time.
Right.
So yeah, I'm happy that they're going away from that because now everyone's on the even playing field.
Yeah.
Like, they can't lie. Well, I'm sure they'll figure out another way to lie. They'll probably just not put their closing costs in correctly like most banks, credit unions, and retail mortgage lenders have done that I've competed against. Yeah, so anyways, keep going. Sorry.
No. I mean, it brings up a good question, though, is are these changes made because of politics, or are they made because of the market? Because I don't understand. Like, it does not make any sense of why you would lower the risk. Like, are you saying that there's an increased risk for a higher credit score client in this market? Or are they doing it for political reasons to kind of help prevent people from the more slow down buyers? Are they kind of getting their own version of the Fed to try to help stop inflation?
I think that you and I will disagree on this.
Okay.
And I think that's a good thing, because I don't want the audience to think that, that you copy everything I do. So, here's the deal. I think that we're in an environment where we believe in home ownership, right?
We do.
Home ownership, I believe in it. It's, if you don't have a primary residence, figure out how to get into a primary residence. I also believe in free market capitalism, which we have not been a free market capitalist country in a long time. The markets are influenced. We're a mixed economy now. I do think there's elements of capitalism, but it's not pure capitalism, right? Pure capitalism is barter system. And this is where it's kind of conflicting to me, but I also have a soft spot for people, unlike what TikTok thinks. So I think that the LLPA adjustments are okay in today's environment. And I'm actually going to look on the positive side and the rosy side and the bright side of it and say it's not politically motivated. What I think it is we're trying to get a control on inflation, one. But I think the other piece is there's a massive inventory issue.
Yes.
And I think that, and I know that you have to, if there's an inventory issue, if you want inflation to go down, you need the price of properties to stop rising. Correct?
Correct.
And when there's a low supply and a high demand, prices are going to go up. And if interest rates were low and money was easy to borrow still, or cheap to borrow still, you're telling me there's not a lot of 800 plus FICO people who would borrow that cheap money, buy a property, and then rent it out, and then they're now competing with the primary, right? They're competing with the person who wants the second home, and they're just driving prices up because of this inventory issue we have. I also believe that FHFA wants to see more people in housing, in primary residence, and home ownership. This is where maybe you're crossing the line and getting a little bit fuzzy politically, because now whatever administration's in office, if you make it more advantageous for a first-time homebuyer to buy a property, and they do, they're going to claim that as a political win.
Yes.
So maybe that's where the line can get fuzzy, but they are not hitting high FICO people. They're giving them less of incentive. They're not crediting low FICO people. They're just giving them less of a negative hit. So in my opinion, it's a combination of a bunch of things. I don't believe in black and white. I believe that everything is a mixed bag. There's gray areas. There's things that are going on behind the scenes that you and I don't even know about. We don't know how this is going to play out, but we have an opinion on how it's going to play out, which I do think we agree on, because you're entering, there's more risk being entered into the market. So with that being said, I don't think it's political. I think it's meant to drive inflation down, to make sure prices don't increase. I think it's also an opportunity for FHFA to get more people into home ownership. I don't think home ownership's a bad thing. However it's achieved, as long as it's not given away for free, if you're taking advantage of the situation and you get into a primary residence, make your payments on time, do what you have to do, whatever you have to do. If you have to go pick up the second child, make sure those payments, don't fall behind, don't get foreclosed on, because you'll ruin the opportunity for everyone else in the long term. But I think the number one way to rise people out of poverty in this country is through home ownership.
Yeah. I mean, look, I agree with that. I mean, it's the reason that we're both in this is because we believe in home ownership. We believe in, that you can build wealth, generational wealth through real estate. And I'm going to say something. I'm going to make a bold statement right now that I do not believe. So these loan level pricing adjustments only impact conventional loans. That's Fannie Mae, Freddie Mac conventional loans. Mm-hmm. They do not apply to FHA loans. I do not believe that these changes are putting more people in the houses. They're saying that. They're saying, hey, we're going to help first-time home buyers. We're going to help people with, maybe like some lower credit scores, because the adjustments are going towards them and benefiting them. But we just had a meeting with one of our technology partners discussing how in this current market, people don't have the money. People are looking at the 3.5% down payments. They don't have the excess money in the bank like they used to. People are looking at it saying, I want a lower payment. Guess what? FHA right now has lower interest rates with lower mortgage insurance based off of change from a few months ago, which means a lower payment for them, even after these changes. Right now, it is not. FHA is what is putting more people into homes. It is what is giving that benefit. This balance that they're doing with these loan level pricing adjustments is not a balance. It is essentially just an additional cost to those who were well qualified, who have spent years making sure that they have their credit where they need to, that have saved up because they want to do the whole Dave Ramsey 20% down, the 15-year term. They want to wait until that point. They are now getting penalized. It is costing them more to buy their interest rate when they buy their home. And to me, that's not a good change.
So I hear you, but it's not actually costing them. They just have less incentive.
True, but it's costing them more compared to if they did not, prior to this change.
Yes.
If they did not adjust the loan level pricing
They
adjustments.
shouldn't have waited so long. They should have came to us. We would have figured something out.
Right.
No, but
and that's my thing is they had it figured out with the first time home buyers. They made the adjustment, the 30 bips, depending on exactly what your loan amount, but it's going to be around $100 a month saved on an FHA payment. That is massive.
between 50, 70 to $100. But
Right.
But here's the deal. That is a big deal. That is getting more people into home ownership. So you're saying that what they're doing isn't going to increase home ownership on Fannie Freddie?
No, I don't believe it will.
I agree. I think it will increase more first-time home buyers, though, because of the publicity it's getting. And they'll come to a lender like us, and we'll put them into a situation that's the most advantageous to them, which benefits them the most, as a good mortgage advisor should,
Yes.
unlike those retail banks, credit unions, and retail mortgage lenders. We're actually going to put you into a good situation and give you multiple options, right? But we'll put them into a good situation, and it's going to most likely be FHA. Maybe even a down payment assistance program,
Right.
but it's going to be what? Most likely FHA.
Right.
Because guess what? You still have to have approved findings on Fannie and Freddie. And if you have a low credit score,
Exactly.
you have a less of a chance to get approved findings. So now you have people like us on this podcast discussing this ad nauseum, and it's not going to push people into conventional where the LLPA adjustments are really at, right? It's pushing them into FHA where they got a 30 basis point increase or decrease on the cost of their mortgage insurance. So,
like, I mean,
I'm going to counter you and say, I hear you. You're angry. And that's how I can tell you have an 800 plus credit score.
I don't, but it's
listen, let me finish. You're angry. I get it. You feel like it's hurting people who are doing the right thing. I get it. And it is. And it's not pushing more people into conventional, but what it is doing is it's getting people talking about it. So guess what? More people who probably need the help, who probably need the kick in the butt to go out and buy a home, they're seeing it on the news, they're hearing people talk about it, and now they're like, I'm going to buy a house. That's how we raise the poverty level in America. Now, do I agree with how they're going about it? No. I think it's a cheap way of going about it. I think we need to preach financial literacy. I think we need to go into the communities that they're trying to affect, because what you're doing is now you're hurting people who have done the right things their entire life from a financial literacy standpoint, and it is hurting them, and it's not even getting more people into conventional. All it did was create headlines. It's a marketing ploy.
Right.
No publicity is bad publicity, right? So it's a marketing ploy to push more people who are in the lower socioeconomic communities into homeownership by saying, oh, we're going to do that. And they're taking it as a credit. So it's almost a bad marketing ploy in a sense, right? So they're taking it as almost like they're getting a credit, and they're not. They're still getting a hit. I mean, I've even had people, why is interest rate still high? Well, interest rates are high right now. And like, you're not, what about the credit? It's not a credit. It's just less of a negative hit. And nobody's really explaining to them that piece of it. We are as mortgage advisors. But I do believe that it's going to get more people who need to be in homes to raise their socioeconomic status in this country into homes. I do believe that. But I do believe it's at the expense of the person who has the 20% down payment, 750 FICO.
Right. No, I mean, look, I'm with you on that. And our goal is still to promote home ownership to anyone. So me saying, oh, don't penalize them is not me also saying I don't want to see first time home buyers get into a home.
Yes, it is.
Because I do. No, it's not. Because I do. But that's the thing is, like, FHA has always been seen as some sort of a downgraded program of,
it is.
There's a lot of derogatory like stuff to it. Oh, you just have to go FHA. There's no, it's not. There's additional risk.
It's harder to close.
There's more criteria. Absolutely. There's more criteria to it. We still haven't had one fall through that we've gotten a contract.
But we're good at what we do. We're not Bank of America.
I mean, yeah, correct. But what I'm saying is it is still doable. It is still a good program. It's good an opportunity for people. And I mean, because you look at it.
I love FHA. I love FHA. 203K renovation, but it is considered a downgraded program. And here's why. Do you want to know why? Because realtor partners of ours, not our partners, because our partners, we educate them on lending, but it's considered a downgraded program because why?
Because of the property.
Because you can go to a lower qualification, and what you said, because of the property, you're 100% right on. Because of the property, right? The appraisal on the property is tougher, but it shouldn't make you fall through.
Right.
It just shouldn't. But realtors who want to make that paycheck, not the good ones that we work with, not our realtor partners, but the bad ones who haven't had the chance to get Nick educated yet, they don't understand that there's many ways to do this. Like, if I can do a manufactured home built in 1978 with a hole in the ceiling on an FHA loan, you can do pretty much any property on FHA.
Yes.
Plain and simple. You can. but they're uneducated on it, and they've probably had a bad lender like Bank of America or Movement Mortgage or Wells Fargo or any retail lender out there, Fairway. Who's the big one we compete with here? Movement. Oh, I said that. Shoot. I said you guys twice. Sorry, Movement. They're super expensive too, way overpriced. But anyways, long story short, they've probably worked with one of those lenders who wasn't good at what they were doing. And they ran up against an appraisal issue and the property came back subject to, and that realtor wasn't good enough at negotiating. They weren't working with me. They weren't working with you or Joe or Linda or any of our loan officers here or Evelyn. It's a downgraded program because you're allowed to go down to a lower FICO score. You're allowed to do less of a down payment and still get approved findings. But it's not a bad program.
No.
And there's a difference. It is a downgraded program. It's not a bad program. And the reason it gets such a negative connotation is because people have this industry backwards. You should go to your mortgage advisor before you go to your realtor. That way they can get you with the people that are actually good at their jobs. But instead they're going to the realtor first, who doesn't understand the financial side of it like we do.
Right.
Some of them do, but not all of them. And they're getting told, don't go FHA. There's a less chance of it getting accepted, and that's true because there's a negative connotation because of the property and the property appraisal. The appraisal on the property, and it's a harder appraisal. So,
I mean that is true about the property piece. It's definitely more challenging. You might have to do some things like a lot, but most of it that you're going to see is chipped paint or like safety issues that probably should be fixed anyways, that you should have looked out for your client to be fixed anyways. So being able to set the proper expectations and do that to a program that will put your client in a better financial position, like why not give that option? Why not have that conversation?
Because you're lazy as a realtor.
Right. I mean, that has to be it.
You're lazy as a realtor. You don't want to take the time to look into it. You're in a market where you don't have to work with FHA clients because there's a tight inventory and there's multiple offers here in the Carolinas anyways. I'm not sure about California, but here in the Carolinas, like we have multiple offers on every property. I was looking. We have something like 50 outstanding pre-approvals right now.
We have a lot
of outstanding pre-approvals that aren't under contract because we have an inventory issue.
We do.
Like there's massive inventory. So that's why they're pushing conventional because it's most likely to get accepted. But if you work with us, we can always give you a ribbon offer.
That's right.
Which is better than cash. So I don't know. For everyone watching out there, do you think FHA is a good program? Is it good for somebody to go FHA? I want to know whether or not, tell me in the comment section. If you had the choice between conventional, FHA, the terms were going to be the same. You don't have a 20% down payment, so you're going to have mortgage insurance either way. Would you rather go conventional or FHA? I want to know in the comment section. And I'm going to personally respond to you with my thoughts based on what you say. So would you go FHA over conventional if you did not have a 20% down payment? Let us know. And if you haven't done it yet, go ahead and bang that red subscribe button and turn on your notifications. We are NBI Financial Group, and we are doing something for you, the people, the working class person. You know what we're going to do, Ben? We're going to give away $1,000 because this is a tough environment and people have less money for down payment. And if you have over an 800 FICO score, you better apply for our contest giveaway because they're hurting you. They're taking away your LLPA improvements. So we're going to give away $1,000, and what we're going to do is you have to bang the red subscribe button, turn on the notifications on our YouTube channel. Once you do that, leave a comment on our videos. It can be any of the videos. Leave a comment. It can't be just like great video. You won't be entered. Leave an actual comment of substance on a topic that we're talking about and leave your Instagram name after it. If you do that, you will be entered in to a random drawing that we will draw on September 1st to win $1,000 of cash or Bitcoin. The more videos you comment on, the more entries you get. So go and do it. Oh, and if you haven't done it, follow us on our social media. We are NBI Financial Group on all of them. If there's a social media platform, we're on it. Find us.
All right, on to the next topic here.
Man, I'm so tired from that first topic, dude. You got really passionate about that.
I did. I mean, yeah, it drives me crazy. And the reason I'm passionate about that is because I really believe in laissez-faire economics. Let the market dictate itself. Do not try to over-manipulate it because look at where we're at today.
We get it. We get it. You hate poor people. Let's go to the next topic.
Oh my gosh. No, I don't. No, I don't. I just hate, I hate the political.
You shouldn't hate anyone.
Whatever.
Jesus says not.
Yeah. Well,
he does. He said, love everyone.
Well,
I got you flustered. You can't even get to the next topic now.
Oh, I can. That's actually a good segue. We're going to skip and jump to the next topic. So we have, yeah, no. So, want to hear your thoughts. So look, we are a big part of the broker channel.
Huge.
Yes.
Huge.
We believe in all, like, brokers are truly better.
They are.
Yeah. I mean, including other broker shops, even some in the area that we have a great relationship with. No, but we have a good relationship with, have like a loan officer that switched companies under mutual understanding. And you know what?
His first loan fell out.
Well,
because they're not as good as us.
But no, but at the same time, wish the best for everyone. Like, the more business that brokers win from the retail channel, we consider a win. We really do.
Because it's a benefit to the consumer,
correct,
to the client, to the home buyer.
To pretty much every brokers out there, we really do support and hope the best for you. We still want to do better, but that doesn't mean that we want to take away from you. We are doing better. We want to beat down retail. Like that is our goal, because it gives a better experience to our clients.
Oh yeah.
We've had issues over the last couple of weeks with another broker. And you mentioned about how you can't hate someone. So I want to hear your thoughts on this person. You want to tell the story?
About Brooke?
Yes.
I love her. She's so awesome. There's a whole podcast that's deleted because of Brooke. And I'm just going to read the text messages.
Okay.
If I still have them, which I think I do. So here's my deal. And I have the text messages still, which is great. And do you have your email there, Ben?
Yes.
Were you CC'd on the original email that I sent to United Wholesale Mortgage, our account rep, Andrew? Shout out, Andrew. We love you. You help us. You hooked us up. You hooked us up with a great title agent or a title company or a realtor who has a title company in Texas, because we believe in building wealth through real estate. We just bought a property in Texas. Now we can expense our trip to the Dallas Cowboys games as they go on to win the Super Bowl this year. For all the haters out there who want to talk crap about the Cowboys, a lot of you who watch this, we've been friends for a long time, worked in the mortgage industry together. Timmy Duran, the New York Giants suck. Go Cowboys. Pull up that email to him. But let me just give a little bit of a backstory. So United Wholesale Mortgage, they do this thing where they train us brokers on how to go out and recruit retail loan officers, because they only work with the broker channel. They're the biggest mortgage lender in the entire country. They only work with the broker channel. And they're the best. Like, they have the best technology, kind of like we have the best technology for brokers. They have the best technology for lenders. It's not close. There's not a close second. And trust me, we've tried everybody. Have we not?
Oh, we have.
We have tried everybody. So with that being said, this person, Brooke, and her name is actually Brooke Marin. And she calls herself an owner and a CEO, and that's okay. Like, we can all call, nowadays you can identify as anything. So she calls herself an owner and a CEO, and just for everybody out there, I identify as the most badass broker in America. And we'll get into that in a second. But what happened is she goes up to this UWM thing, and she learns this way of how to recruit and how to expand your business, how to make your business bigger. And it's kind of a tough environment for a lot of retail shops out there because they're retail mortgage lenders adding stuff to the pricing and causing their pricing to be higher, less credit, and so on and so forth. So long story short, so instead of her taking that information that she learned at United Wholesale Mortgage, you know what she did?
What'd she do?
She took it and then went on like findamortgagebroker.com and then went to United Wholesale's top producers page and then hired some company that sends automatic blasts via text message and email out to all of us mortgage brokers. And if you're a mortgage broker, you own your company. Recruiting us to come work for her on the first 3 deals, you'll get 2 percentage points. Do you have the original message that she sent?
I think this is the second one. I cannot find the first one.
Just read it. Just read it. Read her original message, because I want the people to know, because I'm going to do the whole story, even the phone call I made to her.
So this is the second one. I could not find the first yet. Just, hey, Nicholas, just wanted to circle back and see if you were able to talk today about your careers goals with freshwater lending. I would also like to invite you on our next trip to UWM in Michigan. We'll have your airfare and hotel covered. As I shared earlier, we pay LOs like you 200 bips on their first 3 deals. We pay LOs their commission on the same day of closing with 0 in deductions, and give our LOs and processors a processor for free. We provide qualified leads and have the lowest interest rates and closing costs because we have access to UWM's Inferno rate sheet pricing. We promote LOs to leadership positions based off of what they earn, and additional BPS from their teams too. Most importantly, we treat our LOs like family. I'd love to speak with you and share more about freshwater lending. Are you able to talk now?
So notice what she did there. Did she say that she was the third largest lender at UWM in that one?
She did not.
Okay, so she also said in one of her messages to me that she was the third largest mortgage lender at UWM. So the first one I ignored, I sent it to UWM. I'm like, hey, man, like, why do you have your mortgage broker or your broker partners reaching out to me to try to recruit me for 200 basis points? Now, that sounds good because that's more than I pay myself as a business owner because we're growing the business. Like, I almost jumped ship, dude. She's very convincing. But they're like, oh, no, this isn't going to fly, so on and so forth. So they looked her up, and you know what they find out? Freshwater Lending, which is right here at 1207 East Boulevard in Charlotte. If you want a mortgage, don't go there. They're not actually the third largest lender at UWM.
Oh, really?
Yeah. So the original message, the third largest lender, they'll do the 200 basis points. That whole we'll fly you out for free. No, UWM will fly them out for free. Yeah. You're not paying for it. Let's not act too cool, right? It's like that kid who's driving his mom's car that is like, it might be a sick Camaro, and he drives it to school a couple of days, and everyone's asking him, and he's pretending like it's his car so he can pick up the chick. Like, that's her, right? Like, you're pretending like you have the money to fly them up there. But listen, I'm not going to go too in depth on that yet. So I send that to Andrew. Andrew looks into it. I send it to, and then I left for Hilton, had family vacation for a week. A couple days later, I get a text message, same thing, using UWM's name. Anybody who knows me knows that I don't like to repeat myself. I don't like to have to explain myself. I don't like people who I think are going to interfere with the production of my company. I don't like lenders that I believe aren't on the side of the mortgage broker at all, because that's coming directly for what's ours. And it's all ours, and we're coming for it. We just haven't taken it yet, but we will. So with that being said, I reach out to Andrew again, and you saw it, and it was another person, his higher up on the email chain. I essentially said, you guys need to stop this. It's ridiculous. There's a big difference between taking, retail mortgage lender taking one loan from us and this lady trying to take a loan officer who might produce 70 loans, right? That's a huge difference. And that would directly affect the income to our business. And this needs to stop. We shouldn't be doing this to mortgage brokers. And we've even made a point not to go out and directly recruit other mortgage brokers, loan officers. We won't do it because we believe in the mortgage broker community. And there's enough out there. But I will come for retail because they're my direct rival, right? So long story short, he says, Nick, it's not us. And we looked her up, and she's not the third largest lender here at United Wholesale Mortgage.
Surprise, surprise.
Wait, hold on. That's false advertising, right? So you're not actually paying for the trip. You're not the third largest lender. So, okay, great. They're going to take care of it. They've reached out. She's not even the, what does this business card say? Owner and CEO of Freshwater Lending. You want to hear something funny? She's not even the damn owner and CEO of her own company. So she doesn't actually do business under Freshwater Lending. This is the wild part about this. You know who she does business under? Motto Mortgage.
You know what her job title on LinkedIn is?
What's that?
Legal Compliance Officer of Motto Mortgage.
Legal Compliance Officer of Motto Mortgage. So her LinkedIn doesn't say what she actually does. She doesn't actually own the company. She's not an owner and CEO. She's not actually flying the loan officer to United Wholesale. United Wholesale is flying the loan officer, and they do it for us as well. She's not actually the third. So this is four things now. She's now not actually the third producing loan officer with that infernal pricing. Motto Mortgage is the third biggest producing company, which is a nationwide broker shop. So everything she just said is a lie. When we hire people here, the number one trait we look for is high character individuals.
Right.
The number one trait. If you would be willing to work for somebody who lied in the first 4 things she said to you, don't come here. Don't come here. Go work for Brooke. But let me get into it. Let me finish the story. So I'm on vacation, and my head blows off. And then my favorite part was Motto Mortgage is suing Anthony Casa in court for taking his loan officers, yet they have somebody like Brooke Marin doing the same thing to other mortgage broker shops. Hypocrite much? Hypocrite much? So, UWM says basically we're going to send a cease and desist, or we're going to make her stop. We're going to talk to Motto Mortgage and tell them they have to stop. Great. Awesome. Make it happen. So,
what happened next?
I called her. My dad was sitting in the room, and we're on family vacation. And I said, hey, Brooke, Nick Campo here. I saw your advertisement. I heard you wanted to hire loan officers. Oh, my God, Nick. It is so great to hear from you. I was like, before you say that, let's finish this conversation first. I'm not the type of person who's going to run and hide from a fight. I'm not going to run and hide from a disagreement. Conor McGregor could walk up to me right now, start an argument with me, and I'm going to argue back knowing I would lose that fist fight. That's my personality. And so I'm not going to go and snitch you out to UWM without letting you know it's me. Right? So I said, I'm the one who just reported you to UWM for using their name and lying about your production. And I looked you up on their website, and you're not the third highest producer. You work for Motto Mortgage. You don't even own your own company. You call yourself Freshwater Lending, but you're doing business as Motto Mortgage. So you're not the owner and CEO. And then if you dig a little bit, go to Freshwater Lending's website real quick, and because there's a little bit more I want to get into on this, because there's some more lies in there. So then she mentions that she's going to pay 200 basis points on the first 3 deals. Well, congratulations. Like, if you're balling and you can fly these people up there, pay 200 basis points on all the deals. Right? And then one of the things that was very, very deceiving is, and I have another text message to read. One of the things that was very deceiving was she said you can make up to 150 basis points after that, meaning she's going to have you on a production standard and you have to hit a certain amount of volume to get there. So I wonder what the low volume tier is, right? Because it is a tight environment out there.
Right.
It didn't mention bonus either. It didn't mention sign-on bonus, nothing like that. So I let her know who I was and what I had done. And what I had done was I took the bus and I ran it over, and then I backed it up again, and I let UWM know, like, hey, like, you need to change this. You guys are can't do business with Rocket and us, because they might take a loan from us. What if she takes a loan officer from us? That's more than one loan. And to UWM's credit, they agreed, right? So all of a sudden, she starts crying. Oh my God. Like, literally crying, dude. You're so mean. You must be an angry person to try to hurt me like this. And this is what her voice actually sounds like she had one too many cigarettes. And I'm like, I said, lady, are you serious? You're literally trying to take my loan officers from me, my producing loan officers. You're trying to recruit me, a business owner, to come work with you and shut the business down. You know how mean it would be if I shut the business down and Donovan had to find another job, or Ben he would never find another job. Do you know how mean that is? So I said to her, no, I'm not mean. She's like, I have a family. And I said, me too. And then she said something else, and I said, I can tell that you're one of those poor me victim mentality people. So I'm going to get off the phone with you. I just wanted you to know that it was me. That it was me that turned you in, and that you're going to get contacted. And when that happens, remember this phone call for the rest of your life. So then I went and looked her up on Instagram, and here's the Christian in me. I said a prayer for her. I said, dear God, please do her a favor and let her go out of business, because she is not good at it and she needs to find what her true calling is. And then And Donovan, turn your mic on for this because I have a question for you. And the reason I'm asking you is because I'm sick of hearing from Ben, and I know what his answer is going to be. Yeah. So if I called you from my cell phone that you're sending these solicitations to, and told you, like, listen, yo, I just snitched you out, but I wanted you to know I snitched you out. Mm-hmm. Would you maybe take me off of that text blast list or that email list?
Absolutely.
Okay. So, I get another text message. When we got off the phone, I then texted her. I said, the funny part about you is you are Motto Mortgage. And I sent her the article of Motto Mortgage suing Anthony Casa. And shout out to Anthony Casa for calling out non-disclosure agreements and non-competes not holding up in court. And then saying they're going to take all of Motto Mortgage's loan officers. I'm on the same page as Anthony Casa with that. 100%. Let's take all their loan officers, because if you have people acting like this, coming after my people, coming after me, coming after how I provide for my family, how I help everybody here in this room provide for their families and everybody in this company, well, I'm coming for you. So I sent her a text. I let her know that, and she said, you're a weirdo. Go back to your empty pipeline. You want to know what I said? Nothing. My dad told me not to say a word or I was going to get sued. I said, Dad, it wouldn't be the first time. I'm 4-0. I'm fucking undefeated. And and he was like, you need to grow up at some point. And I said, you're right. Let's make it today. So I just deleted it. I thought that would be the last time I ever heard from her. And then I get this message. Hi, Nicholas. Wanted to circle back with you about joining Freshwater Lending. You mean Motto Mortgage? I know money isn't everything, but it certainly buys a lot of great memories with the ones you love. For this reason, we pay 200 bips for the first 3 deals and keywords up to 150 bips for deals after your initial 3 with $0 in deductions. We pay for all of your credit pulls, loan processor, MMI, CRM, company trips, health insurance, 401k matching benefits. In addition, we pay big ass letters same day you close your loans. Let's get you onboarded in 4 hours or less with Freshwater Lending. Call or text me today. Notice how she took UWM out of her name. Brooke, I hope you thought of me when they told you to do that. And here's the deal. I read that and I said, what a freaking joke this woman is. So money's not everything, but you can buy great memories with your family. So you'll pay us 300 bips or 200 bips on your first 3 loans. And then we're broke again. And you'll pay up to 150 bips if what? Like, there's a lot of hidden messaging in there. So everybody who's like a new loan officer, a loan officer who might be thinking about jumping aboard with Brooke, know that. Also, one of the things I found out by searching her website, because I like to have my facts in order before I put a podcast out there. And I think I sent Donovan and Ben a text on Sunday, right? Hey, we're not putting that out there. I got my facts in order. I was acting irrationally, emotionally, and I shouldn't have done it. I can still take shots, but I'm going to do it in an educated way. Do you know she doesn't do just mortgages?
Really?
Do you have her website up?
I have it up right now.
She does insurance, like she sells insurance. She does taxes. I think it was taxes, but she does several different things, and it's not just mortgages. And if you read through her website, you'll probably see that. So Freshwater Lending does not do just mortgages. So do you want to go and work for somebody who can't survive on just doing mortgages? I don't. What's that smirk for, Benny?
So I'm reading her website right now. It says Freshwater Lending is a mission-driven mortgage brokerage supported by the #1 lender in the U.S., United Wholesale Mortgage. My question for her, do you work with any other lenders?
Well, not to mention, can you still...
Are you really a true mortgage broker?
She's not. My other question is, you keep mentioning United Wholesale Mortgage. They're a great company. But can you not stand on your own merit? Can you not stand on your own merit? Donovan, we talk about United Wholesale on this, but do you see me saying I'm supported by United Wholesale Mortgage?
No.
I'm supported by Nick fucking Campo,
right,
and NBI Financial Group and my team here.
Right.
But
they're a lender partner of ours who are a great partner, but they're
a great partner.
It's a separate business.
It's a partnership. It's a separate business. And who knows? Maybe tomorrow they up their interest rates and they go through the roof. And guess what? We're not doing business with them anymore.
Right.
So my question is, how was she able to say their names, the company?
So they had to take the name out,
Right.
like of the text, and I don't know if they know about the website, and I'm not going to go that deep into it. But what I would say to anybody who's getting these messages, any broker in the community, any loan officer, even if you're at a retail lender, when you come over to this side of it, you still need to be careful who you're joining forces with. And this is just call it a PSA, a public service announcement, that Brooke doesn't do just mortgages. Brooke isn't the owner and CEO of her company. Brooke will not continually pay you 200 basis points. Brooke won't even pay you 150 basis points. You'll be on tiers, right? So Brooke won't do any of that for you.
Right.
Everything that Brooke says in that original text is a lie. Brooke is going to rely heavily on United Wholesale. She's going to fly you up there and expect you to do training with them. Then she's going to expect you to produce and probably not have too much support for you because she's too busy selling her insurance or whatever the hell else she does. Also, you're not freshwater lending. You're actually model mortgage. And she's not matching your 401k. She's not providing the benefits. She's not doing any of that. She's not an NBI Financial Group because we do that for all of our employees. Like we do that, not model mortgage. NBI Financial Group does that. Model Mortgage does all that for her. And guess what? If she doesn't produce that model mortgage, I bet they get rid of her because her P&L won't be high enough. Her profit and loss statement. She won't make a profit. She will lose her standing with model mortgage. That's how they work. So she's probably being threatened with that, which is why she flew up to UWM and went to that thing on how to recruit loan officers. And the other piece is she wants to live off the back of UWM just based on her website. So she probably wants to live off the back of her loan officers as well. I bet you it's extremely hard to get to 150 basis points. And if she's going to change you from 200 bips down to 100 bips just like that after 3 deals, you don't think she's going to adjust her comp plan halfway through? Right. Because people like that, there's never enough money, which is why she's doing multiple things and not just mortgage, right? But what she doesn't realize is if she was actually a true professional who's great at her business, she wouldn't need to be model mortgage. She wouldn't need to cut a piece to them. She wouldn't need to do that. She would be able to be like us, NBI Financial Group, leading the industry with technology, only broker that has Candor, Meridian Link, like the best of the best technology we have, averaging 14 days clear to close at all lenders, not just UWM, because we do things the right way here.
It's the retail mentality. Give out half-truths.
Half-truths. And
Like-
I bet she came from retail.
Yeah.
So half-truths. And I would not want to work for a person like that. High-character individuals, that's what you want. Yeah.
Right.
Does that explain everything to you?
Oh, it does.
Is that a lot better than the last one?
It's one of these things, and we see the clients all the time come that had a quote from, got a loan estimate from a retail lender. They come in and, oh, well, they offer me this and this rate.
No, they didn't.
Did they explain to you the cost of that rate, of what what actually goes into the rate, what your options are? No, they didn't. They just gave you a number that they thought you wanted to hear, conveniently left everything else out.
And that's what she's doing.
And didn't fully explain it all.
And that's exactly what she did.
It's you go online right now and say, oh, interest rates, and you see someone pop up with 5.25% interest rate. Like, good luck getting that at no cost.
I want this to be a 10-minute clip on our YouTube, and I want this segment to be a clip on my social media, and I want, when it's posted, to tag Freshwater Lending. I want Brooke to see this because I want her I know she knows my voice because she changed her whole messaging, and I have proof. I have the receipts. And then I want to challenge Brooke to something. I'll pay her favorite charity $1,000 for her to come sit here and to explain to me how she's better than NBI Financial Group and why she's recruiting our people. And I'll give her the opportunity to talk. Like, I'm not mad. Like, I'm not going to yell at her. She won't take my people. And if she does, I didn't want those people anyways. I want wolves. I want dragons. I want lions. Right? Sharks. So I will pay $1,000 to her favorite charity if she comes on here and she debates me on why she is better and why Model Mortgage is better than NBI Financial Group. And this is probably going to be the only time in her career that she's going to be able to have a argument, because we are very close to blowing up. And when it happens, 5 years from now, Model Mortgage will be out of business. My competition, and I truly believe this, I think the person that is doing things the best way right now and how things need to be done on the mortgage side is actually Anthony Casa on the broker channel. Just
Really?
for break down the marketing, technology, all that. Yeah, I sat on one of his calls. I'm always watching the competition, Benny. And I think that we're very similar. We just didn't have the same financial resources to go as big as he did, as quickly as he did. So I think that and listen, I'll never take anything from Anthony. He is extremely intelligent mortgage person. He's extremely intelligent businessman. He's been very successful. He had one of the biggest shops on the East Coast for a long time. He was very high up at AIM and really pushed that forward. I can't take that from Anthony.
He just needs to leave people's wives out of it. But
I mean, everyone makes mistakes, man. At some point, you got to forgive them, right?
Yeah.
I don't agree with what he said, but are you gonna hold that against him for his entire life?
Yeah, that's a good point.
So, but yeah, you don't have to agree with everything of what somebody has done to acknowledge that they do have places of greatness. Now, don't go all Kanye West with it, but like Anthony's very good at it. He's great in mortgage. Has he not been?
Yeah.
Like, and he's a leading face. He's recognizable. He's one of the top mortgage guys.
Is. His social media is
on point. He ran AIM. He ran one of the biggest mortgage broker shops on the East Coast. Now he's running one of the biggest mortgage broker shops again on the like nationwide.
I have a question, and I don't know.
I don't agree with what he said about Austin Nemick's wife, and I don't agree with him going after mortgage brokers, loan officers either. But I think that if you're looking at who our competition is going to be, I'm not looking right now. I don't care about right now. I don't even care about the profit right now. I care about 5 years from now.
Would you say that he has the biggest social media presence in mortgage? I cannot think of anyone higher.
Matt Ishbia, maybe. But like as a broker,
I mean, and mortgage general. Like I don't know.
I do think so. I think he did a good job with his personal
I do
brand.
too. Like, I mean, even Matt Ishbia. Like I'd say that he has a bigger, at least social media presence.
Yeah, like videos and stuff.
Yeah.
Like, yeah, I don't know anybody else. Gary Vee talked to a group of mortgage brokers a long time ago, and he told them to get on social media, and you're a media company first, and that's where I get that line from. And so Gary Vee did that a long time ago, and nobody took him up on it. Anthony Costa's doing it, and we're doing it, and now I see people like PMS Mortgage, or wait, is that their name? PMS trying to copy us. You guys know who you are. I won't say your actual name, but those are your initials, PMS. And I see their videos and stuff. I see everything, man. Like, that stuff doesn't bother me. No, imitation is the best form of flattery. So,
you know what we need to do now?
I don't know.
We need to remind everyone to hit that subscribe button, click the like button, and hit that notification bell so you are alerted to all our future videos. Also, make sure to follow us on all social media platforms. That is Facebook, Instagram, LinkedIn, TikTok, YouTube. What am I leaving out?
It's all of them.
Yeah, just if there's social media platform out there, we're on it. So follow us. All right, I want to get back into some market talk because looking at mortgage rates went up last week. We lost some pricing. Yeah. Looking at the reason why, there's a couple reasons why. The biggest of that goes to the right now the budget, and the budget ceiling that we're coming up against. June 1st, we're just a few days away from hitting the U.S. budget ceiling.
Can we let it burn?
We're pretty damn close. So anyways, but today actually looks like they're about to finalize something. And want to go over some part of the things that they're doing to get your thoughts. I think it's kind of interesting. So part of it too. So you remember hearing in the news how they hired all these IRS agents and they're trying to get more money and crack down on taxes.
That's why I stopped being a bookie.
Well, they lost. Yeah. They lost $10 billion in that. So they are now reevaluating that IRS funds and cutting those back because they just figured they lost $10 billion in salaries by hiring all those people.
Billion.
Yes.
Like 10 billion.
Yes. $10 billion.
What were they paying?
People, agents, all those agents.
Yeah, but what was the pay rate? $10 billion with a B? Like, not million.
They have
I have a lisp, so it's hard to understand.
$1 billion deficit, yes.
It's not my fault I have a lisp. Oh. I have a weird bone growth in my mouth. It's weird. But anyways, long story short, I have a disability. So, Brooke, don't come at me. You're making fun of a disabled man.
They have an $80 billion, IRS has an $80 billion budget. And is being, yes. And only brought in $70 billion. And yeah.
Hold on. So you're telling me the people who make us pay taxes have a $80 billion budget. They had a $10 billion loss.
Yes. just looking at some of these things that they're talking about now that they're finally releasing some of the actual talking points, it's almost comical.
What else? They should abolish the IRS. Get rid of it. Get rid of it and go to more of an electronic system where people, pay taxes through that, and you can track it maybe through that. Not like electronic money, but like there's a way to get our technology to where we don't need all those IRS agents, and also they need to lower the tax rates on everybody. And if they do that, they would actually see an increase in tax revenue because more people would spend that money that they're not giving to the IRS, and they would see it through a sales tax portion. There's a lot of different things that they should be doing that they're not, and it all starts with less taxes. What else were they talking about?
So there is still $30 billion sitting in a COVID aid fund that has still been unused. Just sitting there.
Wait, hold on. What?
There's $30 billion just sitting in an unused $30 billion sitting in a COVID 2019 aid fund still.
For what?
For, I don't know.
Because they're probably going to get sued.
Like, it's just sitting there. Like,
that makes no sense. So
as a business, like,
that's $40 billion. Did they bring up all the money going to Ukraine?
They did not bring that up.
They should, because if you want to stop innocent people from dying, then you need to stop funding a war that's
not
allowing innocent people to die. But
not that I've seen. They brought up energy credits, like energy reforms.
That needs to go too.
They brought up toughening the requirements to be able to cut back budgets for the TANF program, which is Temporary Assistance for Needy Families.
Stop. What is that one?
Temporary Assistance for Needy Families program.
Yeah, but what are they talking about doing with it?
Toughening the work requirements to be able to cut back on.
Yeah, you have to there's a lot of holes in a lot of those assistance programs where you need to make sure people are trying to work.
Right.
And I think we could do a whole podcast on that. What else?
They said it's not specifically food stamps or Medicaid, but it's work requirements is the hang up. To be able to.
Why would anybody not want people who are on an assistance program to try to find work? Like, where's the hang up there? Like, I'm not understanding.
And that needs to be a future podcast because I 100% agree. Like, and Donovan, because we had this when you had an interview with us. So you can speak a lot to this as well. Like, that is absolutely like,
what would the holdup be when it comes to, because you've done a lot with this through school and everything else that you've been doing. Like, why would people disagree that there needs to be a work requirement or trying to get a job for that type of program?
What program is this again?
It's TAFN. It's like Assistance for Needy Families.
Right. So, but we talked about something similar with the housing, housing like
temporary housing.
Correct, temporary housing, government assistant housing. Yeah. Like, it's a great tool to get people in the right direction, but work with them, educate people.
Right.
Like, and that's why we do what we do, is about educating people, helping people get on the right track. Not everyone's made the best decisions. Do not hold that against them. Give them the help they need now, but also make sure that they are moving forward to be able to support themselves in the future. Because if not, like, where does it end?
I agree.
So you think that, and I'm just trying to get differences of opinions here. I wish there was somebody else on the podcast, because what would be a holdup when there's a work requirement to something like that? Like, I don't understand what the negotiation is. Is it length of time? Like, do you see what a holdup would be? What, like?
No, I don't actually know. Are they saying that they can't? Are you guys saying that they need to work in order to get the assistance?
Well, that's what. So this is for the debt ceiling, and this is the stuff that the Republicans and Democrats are negotiating to make sure that we don't default on our debt. And there's a holdup so the Democrat side doesn't like whatever is being proposed by the Republican side, saying that there has to be tougher requirements as far as trying to find work, from my understanding.
Oh yeah, no, I don't understand why they would say that.
I think if you talk to 99% of Americans, they would all say the same thing, right? Like,
right.
Hey, yeah, like, you need to get out of this eventually. Anything else in that bill?
Says non-defense discretionary spending in the next fiscal year.
Hold on. Repeat that. Non-defense discretionary spending.
Correct. In the next fiscal year would be below the current fiscal year's level. So they're agreeing that they have to cut it back.
Thank God.
But all discretionary spending, including defensive, would grow at 1%.
Oh, so we're not actually reducing the budget. They would grow it.
Correct. Just more goes towards defensive and military.
So funding war. Okay. I have a question for everybody, and this will be a good one for my personal TikTok. Do you think that if you are on government-funded public assistance, that you should be required to find a job in a certain amount of time, or else you lose that assistance? Let me know what you think in the comment section.
Can I say something funny?
Yeah.
There was a thing on Twitter. This guy, he deleted the tweet because he got a lot of hate for it, but I want to know how you guys feel about it. He was saying that if you own a business and you interview someone, an interview question should be, at what age did you get your license?
Why did he say that?
Because he was saying if you got it within a certain time, then you were more driven. But then he was saying people who got it at a later time were not. And he got like a lot of
mixed reviews.
Yes.
What's your thoughts?
I'm in between.
I think I am too.
Because it's like circumstances and it just depends, you know.
Can I give you a circumstance? Shout out to my one of my best buddies from growing up, Preston Cornegay. A lot of respect for him. I think he got his license at a later date, and it was a circumstance situation. It wasn't a driven situation because he's one of the most driven people I know. I don't think that should be an interview question.
Yeah, I mean, I guess he was trying to say, like, if you want, like, hard workers, then you would kind of find people who really went for everything they could, like, as soon as they could.
Agreed.
Right, and I get it at that point. But also, it's like, you know, that doesn't really determine. I mean, because some people's parents could have just made them get it when they turned 16 or 17, you know?
Right.
Well, that's what I mean. They wanted to get it.
Well, and then, you know, when I went to Presbyterian College, there was a lot of rich people there. It's a very private school in South Carolina, and I wasn't used to that. And there's a lot of people who got A's, who drove nice cars, who did a lot of things that were driven within the confines of that school that I'm a lot more successful than now. And just so everyone knows, I wasn't driven within the confines of the school. I wasn't the best student. I got good grades in my business classes, but the other ones I might not have gone to. I actually had a 95 average, which is an A average, close to an A plus average in one of my classes, and I had missed more than you were allowed to miss from a class standpoint because I skipped, and he failed me. I'll never forget that professor. But you'll know what the lesson it taught me?
Scarborough, right?
No, it was Tobin Turner.
Oh.
The lesson that it taught me was it doesn't matter how well you perform if you don't meet the requirements, all the requirements. Yeah, you had an A, but also it wasn't just getting good grades that was a requirement to pass this class. It was also being here and being a participant, and that was a requirement as well. And I met the education side, but I did not meet the rest of the requirements that were part of the contract to pass, and so I failed. And it taught me that lesson, and I think it took me until today to realize that. So, well, and thinking back on it, but yeah, man, I think that Twitter, or it was Twitter.
Yeah, it was Twitter.
I think it's more of a circumstance thing. I don't think that's going to tell if someone's driven. You want to know what I will ask people? Did you have a lemonade stand? If you had a lemonade stand, you were probably an entrepreneur, or you like to make money, like you were doing something to try to earn money. You didn't think it should be given to you. Did you cut
grass or something? Did you mow the lawn?
Did you cut grass?
Yeah.
Did you deliver newspapers? I'm an entrepreneur now, and I make pretty good money. And that's not a brag, but, you know, my first job I was less than 10 years old, and it was as a paper boy. My grandpa would drive me around in his van, and I remember he had one of those old Astro vans, and you could keep the door open. And I played baseball and football. I was quarterback and pitcher. You can't tell now because I got fat, but I would throw the newspapers and hit the front door. Or sometimes I would ride my bike. My bike I thought it was cool. Everyone back in the day thought it was cool not to have brakes on your bike, which was probably pretty stupid. And I would ride around on the bike, and then every Saturday I'd have to go around and I would collect it. I think it was $1.25 for a subscription to this new newspaper back then, which makes it sound super old. But they would come in these little yellow envelopes, and every Wednesday I would deliver them, and every Saturday I would pick them up. And it was just, that was 10 years old. Then when I was in middle school, my dad opened a restaurant, a pizzeria. I worked in that pizzeria. I remember working when he first opened for 10 hours, and I could do everything there. I was good at it because I watched my dad working in restaurants and stuff as I was growing up. And then, I was there when he was setting the whole thing up, and I was just fascinated by it. And I worked a 10-hour day, and you know how much he paid me? $20. He paid me $2 an hour. I'll never forget that, which is fine. Back then, $20 when you're a sixth grader, dude, like, yeah, that was cool. That was one more $20 bill away from a video game. So, it was. And then after that, I went to work at this place called Cool Dipper, then Polar Freeze. So, like, I was working my entire life. I worked at Russo's Bar and Grill, making pizzas and washing dishes at the same time. I still have a scar on my arm because I stuck it in the pizza oven, to get the pizza out while it was wet. And if you're wet and stick your arm in a hot thing, it burns you quicker. People don't realize that. So I remember I saved my first $800, and I got paid cash at Russo's. I saved my first $800, and I just didn't spend any of the money. And that was like, I remember I had this little a wallet came in it. It was one of those like wood boxes, and so I just kept it stacked in there. And that's the first time I understood what rubber band money was. It was really cool seeing it, and that's why I was like, man, I fucking really like making money. And then I just worked my entire life. Remember, I worked at Pizza Hut while we were in college, plus I did the student assistance thing. So I think that if you have a work history of trying to work, and that doesn't mean jumping around to a bunch of different jobs, but like you're trying to work and you're trying to make money, like I think that says something. I think that if you ask people like, hey, did you trade baseball cards? Did you do this? Did you do that? I think that means more than a driver's license because that means they can barter. So they're going to be good negotiators. We have an intern here who even watched his dad. He worked too, but he cut grass. But he even watched his dad growing up, and his dad's an entrepreneur, a very successful one. And this kid is bright, man. He's 22 years old, and he has superstar written all over him. If you're watching this, sir, don't take it as a compliment. But I think there's other questions you can ask. But if you haven't done it yet, bang that red subscribe button and turn on the notifications and make sure you comment. You can follow us on all our social media. We're NBI Financial Group LLC on all of it. Here's the deal. We are doing something because we're in a recessionary time, and people are talking about how times are tough. The times are so tough that the FHFA is giving you better LLPA hits if you have low credit scores. They're taking away from those who have higher because times are tough. So you want to know what we're going to do to help out with times being tough? We're going to give away $1,000. It's either going to be cash or Bitcoin. All you have to do is bang the red subscribe button, turn on your notifications, comment on our videos with a well thought out thought, not just great video. Leave your Instagram handle, and we will enter you into the contest that the drawings on September 1st for $1,000 in Bitcoin or in cash. And the more times you comment, well thought out comments, the more entries you get, the better your chances are to win. So make sure you go ahead and bang the red subscribe button and turn on notifications. Ben, I have a topic I want to talk about. You constantly plan out the topics, and you never give me my chance to voice my opinion. We believe, actually, let's save this for next time.
Okay.
Go to the, because this is a long thought out thing. So go to, and we'll write it down after. Go to the comments on Twitter.
I'm gonna go to TikTok and Twitter. I don't know, there's Twitter just has these topics, but the president tweeted. He said, "We created 12.7 million jobs.
Oh my God!
Nearly 800,000 new manufacturing jobs. Unemployment is at a 50-year low. Workforce participation is at its highest in 15 years. We're building an economy that leaves no one behind."
Lies. We've talked about this. It's that exact quote. It's
like he just tweeted this like a few days ago.
Talk about half truths.
Hold on. Can you read the first 5 comments? It was
a screenshot, but I can go to it.
Did you read the comments?
I mean, there's a lot of mixed reviews, but I can go to the comments. But what do you guys think about it?
So here's what I think. That's a half truth.
Yep.
He did not create those jobs. Those jobs are jobs coming back into the market after being shut down from COVID. He took over it during a shutdown, and they slowly rolled back. The lowest unemployment rate that we truly ever had in this country was actually under Donald Trump, and nobody wants to admit that.
But look deeper at the employment numbers too. Like, yes, unemployment's low, but more people are working part-time jobs. Like, number of hours worked are down. Total wages worked are down. Like,
Right.
it's,
Yeah. That's a headline.
it's a deceiving headline.
Well, and the other piece is I'm pretty sure if Donovan reads a few of the comments, if he can find it, that a lot of the stuff that they like. What I commented on the unemployment numbers being lower under Donald Trump and the job, that's more of a job creation thing, right? So he didn't really create the jobs. He brought back jobs that were shut down because of political reasons.
Correct.
With the COVID-19 pandemic. I don't even like to call it a pandemic. I understand a lot of people died, but like I think the numbers needed to be higher for deaths to be a true pandemic, because the Spanish flu, like, it was way higher deaths. But maybe we shouldn't compare it to that. I don't know. I'm not a scientist.
Yeah,
But
someone said that this is as delusional as it gets. Somebody said part-time jobs don't count.
that's what Ben's talking about. Because wages are down, because hours worked are down, which is a part-time job, and wages are down.
And you look at the sectors, the reason that it's even up like it is because of the increase in travel jobs and restaurant jobs. I mean, and that's people finding part-time jobs because right now they need to find a way to live.
Ben, where do you verify this information? Because I want people to know that we do verify this information.
Right. I mean, all sorts of places.
CPI.
These are like, there's CPI numbers.
Specific.
ADP releases numbers. All payroll companies release these
Ben
numbers.
says all kinds of places, like everybody watching knows exactly where he goes.
No, but I mean, just Google it and it'll come up. These numbers come in essence from ADPs, from your payroll companies. They are released, but you can find them on every single major news outlet. Will be able to post them too. Now, it's not going to be the top story. You're going to have to dig for it. But if you actually search for it, you can find these numbers.
Yeah, someone said returning to work isn't a new job. I agree.
Yeah, no, it's
Well,
not a new job.
true, yeah.
And it's just it's sad that our politicians are resorting to that type of tweet. Like, did you not do anything good in your administration? Like that's my question to you. You're doing that, and I think that with modern technology, podcasts, we have access to all the information in the world because of Google. Don't you think that maybe people see through the bullshit now? Like most of the comments under that, were they mostly like, this is BS? Yeah. And I have to believe that it's not just Republicans that are commenting on that. Like, I just don't believe it's just Republicans. I think that the American people as a whole see through the BS. And I'm not getting political. Let's move on to the next.
Yeah.
But yeah, I think my question was pretty much like, so do you agree? You said you agreed partially, like some of it was true. So the job portion, or
it's not really true. I think it's a twisting of what the actual facts are. I don't think anything's black or white. I just, like, they're saying this is black and white. How about say this? We reopened the economy, which brought back X amount of jobs. We have, because of the reopening of the economy, we have more part-time / gig work where like, just tell the truth. Like,
right.
So no, I don't think that they're telling the truth. I think they're trying to mislead people. Are they flat out lying? No, but they're not telling the truth either. So the parts that are true are, yes, it wasn't actual job creations. It was restarting of jobs. Like, so they're twisting key words to make it look like they actually did and created these jobs. These jobs were existing prior to the shutdown. A lot of them.
Right. I mean, it's in a worse position
We're
overall.
We're in a worse
from an
position
income
overall,
standpoint. Yeah.
From an income standpoint. So is what they said, the flat out line. No, but it's that stupid spin zone stuff, man. Like, they spin it to make it themselves look extremely good, and people are starting to see through it, which is why pretty much all the comments are what they are. Have you found a positive comment yet?
absolutely not. Somebody say have a good weekend to him.
Yeah. Well, Donovan, my question is, and I want to hear your thoughts real quick on this, and then we can move on to the next one, was, there's no way that's all Republicans commenting on there.
No, I mean, we've all been impacted, so that's like an American thing.
Let me ask you a question. And the numbers just came out on this report too. Donovan, do you think that the average American thinks they're in a better financial position today than they were 3 years ago?
I don't see how we could be.
I don't either. I mean, we're doing well as a company, but it's not easy. Like
No.
it's a lot harder now than it was 3 years ago. I literally did nothing and was getting paid at my other job. I mean, I was working hard, don't get me wrong, but like when I was an account executive, like it was the economy booming, people
Right.
buying houses, refinances, and all that.
Open your LinkedIn right now.
Yeah.
Like it's
everybody's looking.
everyone's
for
looking for a job. Right. Even, I mean, people are working part-time jobs. So they're listed as employed. They're listed in that number, but they're still actively looking for a full-time job to support their
I
family.
hate that this is what our economy is right
It's-
now too. And I'm sorry, like if you don't like the previous president for a multitude of reasons, I don't think that we would be in this economic situation. I don't think that. I mean, let's talk about another Democrat president. I don't think we'd be in this financial situation, or not financial situation, but economic situation if Obama was president or Bill Clinton. Like,
Yeah.
I just this administration is. I just never seen anything like it. Have you?
No.
Like both sides of the aisle. I have never seen anything like it.
The
guy can't speak.
do you think we're closer? Because, and I agree with you, like looking at, so like people are self-educating more now than ever because of the access to different sort, like YouTube, like the information is now out there. You can get it.
Yeah, you can get it. In
Right. And people no longer trust major news outlets.
Nope.
Is a majority. Do you think we are close to moving away from a two-party system?
No.
Okay.
I think that we are defined close.
Do you think we are 16 years out, 4 elections out from potentially having another party?
I think what's going to happen is these parties are being forced to reel it back in and come closer to the middle. I think both sides are.
Okay.
You saw it with like the Bud Light boycotts, and people are just fed up with that. And now it's the Target boycotts, and that's the right being fed up with some of the stuff that's happening on the left. And you're seeing that the left is also kind of fed up with some stuff that's happening on the right. And I think people are sick and tired of the extremism because 95% of our country is like very middle of the road. And most of us all get along, even with different backgrounds, different religions, and it's the rhetoric is tired. And I think with more facts being out there, both sides of the aisle, like people who vote on both sides of the aisle, not the actual politicians, but the people who actually vote, I think that they're starting to see the actual facts and information. I think we're becoming more educated, which is going to force them to come back more to the middle. I think we're in a very similar time to what the 60s was. That's my opinion. I don't think that we're closer to getting a third party. And I think a third party would only take away from one of the other parties.
Yeah.
I don't think it's you need a 4-party system if you truly want multiple parties.
Yeah.
If you truly want multiple parties, you need a 4-party system. And the founding fathers wanted a 4-party system and did not want a 2-party system, and it's because of this. Yeah. So, no, I don't think that we're any closer. Donovan, did you have any other social media stuff?
I'll do one last one really quick.
Yeah, cool.
I know you talked about let it get burned.
Let it burn.
And you were talking about weaponizing the dollar. You got like a lot of feedback with that one. A lot of people were saying that
I need to go look at that.
Yeah, it was someone said retirement wasn't talked about to those entering now. They were told that Social Security was their retirement. What if they change it on you? Taxes and all of that other stuff. Someone said I don't mind paying for people who need basic things in life. What I do mind is all of the other BS that they're doing with my tax money.
Agreed.
Mm-hmm.
Agreed. So the person, I want to touch the first one. Did we talk about Social Security on that clip?
Yeah.
What did I say?
I can't remember specifically, but that's what all the comments are about, the Social Security.
I'm going to have to go back and look because I think it was something along the lines of when we retire, we won't have Social Security. Or privatizing Social Security. It was privatizing Social Security, maybe. But I'll go back and look. And I'm going to comment on all those. A couple of things. That comment about the Social Security is a lack of financial literacy. Anyone who's financially literate knows that you need to invest in multiple areas and diversify. So if we're only relying on the government, that's a terrible mindset because the government is very inefficient, which the IRS proves since they have an $80 billion budget with a $10 billion loss.
Yes.
So they're terribly inefficient.
$30 billion just sitting there.
So never rely on the government. You should never try to rely on anyone. You should rely on your hard work, and that's it. So what was the next comment? So the Social Security one, I think that's I feel bad for anybody who doesn't get Social Security or won't be able to get Social Security, or if we let it burn, then Social Security payments stop coming. Well, go to a bartering system. I'm sorry, but at some point we have to rip the Band-Aid off, and some people are going to be hurt by that. And that sounds very callous, but like if we want to hurt our grandchildren, our grandchildren's grandchildren, we can keep doing what we're doing. Somebody at some point has to pay the piper. Period. And
I don't think that the government thinks that we'll stick around long enough to receive it.
Our generation won't.
No, there's no chance.
Like it's in a massive deficit. Like Social Security is in a massive deficit because guess what the government did? They taxed us with the Social Security tax, and then they started taking money out and putting IOUs in, like, oh, we owe Social Security, and then they never replaced the money. So then Social Security, which was supposed to be an investment that's growing constantly, guess what happened?
No,
it didn't grow like it was supposed to. Also, the age of life is a lot longer now, so people don't think about this. We live longer, so you need to up the age of Social Security, because when Social Security was originally created, you got it at like 64 or 65. I think it might have been 61 originally, but they upped it to 64, 65 when you're now eligible for it, and people were dying at 74. 67, 68, 69. People live into the 80s now, and the average age of life has increased exponentially. So you need to update the age you can receive it at as well. And if people don't want to work until they're 80 years old or 70 years old, well, educate yourself on a skill that is going to pay more.
I don't see people agreeing with that comment, but
why?
Like pushing it to what age? 80?
No. I'm saying if you don't want to have to work that long because Social Security is a failing system, or pushing it to 70, I think it should be at 70 at this point.
Yeah.
If you don't want to work till 70 to receive retirement, then get into a career that is going to do a 401k with a 3% match, like loan officer career. Get an education in a trade or something that pays more, that allows you to invest in a private form of retirement investing, because relying on the government money is not going to work well for you. And it's such a small amount of money too.
You know, I like Jordan Peterson. He has,
yeah, we know after that shitty email you sent last week.
This is a good one. So he came out and he has said that he told his kids, he said, I would rather you not go to college, go to trade school instead. He's told his kids that.
I've told my wife that. I said, I'm not sending my kid to college so they can graduate and
can't
make
disagree.
$40K a year.
Like,
when they could go to 2 years of trade school and make 100.
Right.
Like, and then you're also learning real life skills. Like, I was talking to our intern about this. Like, we're running a business. They did not teach us how to run a business in business school. No. So I paid $120,000 to go to business school, and they didn't even teach me how to run a business. They taught me theories.
Right.
Theories that a lot of them aren't practical.
And are outdated by the time you're actually doing things. It's
back in the day, like sports, the sports journal. What was it? The business sports journal. I forget what it's called. Sports business journal. It was a newspaper, and that's what we were learning about in sports marketing and sport economics, was from a newspaper. Like, it's all online now. Like, and it was online within 2 years of us graduating. It's outdated. You're 100% correct. Yes, I don't think people, let me clarify, I don't think people should have to work until they're 80. I think that the age of Social Security needs to be up to 70. And if you are waiting to retire based on when you can receive Social Security, that shows your lack of financial literacy. And that's not meant as an insult. Being ignorant doesn't mean that you're dumb. It means you just weren't taught and you just don't know. And that can and cannot be your fault.
We just talked about education not teaching real world values.
Well, and here's the other piece. It's not your fault up until you're 18, but once you hit 18 and start kind of going off on your own, or whatever age you start going off on your own, if you aren't teaching yourself at that point, that is your fault. I teach myself stuff all the time. I read a book a month, multiple podcasts, a lot of different things. So
we'll see what feedback that is. I feel like I get like mixed reviews.
I don't get good feedback.
Right.
But the problem is I don't think that people watch our full episodes. I think they're just seeing those short form clips. I think that if they watched the full episodes and got to know me, I would come off differently.
Think so?
I do.
Okay.
If they actually hear me.
Or they watch the entire thing.
If they hear me, yeah. I mean, maybe not, or they're just lazy and they don't want to work. I don't know. That could.
I just think that that's gonna get like a lot of feedback because I remember we talked about, I was looking at some of our old clips and you talked about how Americans were fat, lazy, and
they are fat and lazy.
Right. So
I mean,
of course,
54% of our country
are not
going
to want to. They're not going to want to push it like further. If anything, they're going to want to like bring it up even more, like bring it back to maybe 61 or something. Who knows? But that's just what I think that they'll say. I don't know.
You want to know? I'm going to respond to this if that's okay.
Yeah.
Because I like to respond to stuff like this because it gets them going. There are countries all over the world that are socialist countries that you get a stipend and you get things and you get to stop working at a certain age and so on and so forth. They should go live there. Like, they really should. Like, America's not for them. Like, America's for, we were founded, like, our principles and how we became as a country, like, there was just a different mindset. We weren't soft, we weren't weak, we weren't lazy. We did things differently than the rest of the world, which created the greatest country in the entire world to this day. Now, there are some foundation cracks in there because new theories and new thoughts were brought into what was once America, and it's changing things. But, like, listen, if you don't enjoy working hard, you don't have to work hard. You can go to a million other places where you have a decent quality of life, where it's more of a socialist economy. Go. Bye. Peace. Like, we're America. We always have been, and don't want to break it to them, but we're not going socialist. If anything, we're going corporatism. So, yeah.
I'll end it with this. I saw a tweet on Twitter, and someone said, working harder is easier than being poor.
It is.
And I agree.
100%.
Yeah.
Let me ask you a question. What was your upbringing like? Did you guys have a bunch of money? Were you rich?
No, not really. Nope. Just average family. 2 boys, 2 girls. Yeah. Mom, dad.
So you work pretty hard. You have 2 jobs.
3.
3? What in the hell?
You have a third now?
Yeah.
3 jobs. So why do you do that?
Multiple reasons, honestly. Like, I want to like I want to like teach myself like discipline for one, and then 2, like I'm learning the value of hard work. In my opinion.
What makes you want to learn the value of hard work? That's a trait I see in you. What makes that in you?
I don't think I took it serious when I was younger, and now I just kind of like feel the need to like get certain things accomplished.
So when we say,
and maybe it's an age thing because I'm 30 now, so I kind of look at life differently. But
it feels like you're on the clock once you hit 30.
Yeah, it does.
It
kind of does.
Yeah. So when I say something along the lines that a lot of like Twitter, or I don't know about Twitter. Twitter's a little bit more open, but TikTok won't agree with, or a certain generation of people won't agree with. Like, hey, if you don't like the circumstance you're in, change your circumstance. Do you agree or disagree?
I completely agree, 100%.
So you believe that people can change their circumstance if they focus on it and try to get better.
If you work hard enough, yep, you can.
I mean, I just had never asked you that before, so I was just wondering, and I kind of knew just based off our conversations. I know you agree. You and I have gone on that. That statement right there is controversial. You know that?
It's crazy.
How?
Does that if you work hard, you can change your circumstance? People don't agree with that. Like, am I wrong? You're on social media. He's not on social media like you and I are.
Right.
Do they not like take offense to that?
Yeah, I mean, so many things get traction nowadays. People don't really want to work hard. They rather it come to them a lot easier. And right now, I think the trending thing that a lot of people are talking about is, are you considered productive or free-spirited if you like work somewhere and you don't want to be there, so you just quit after a certain amount of time? Like, people are like, oh, be free. If you don't like a job, quit it and just keep finding another one. But some people are like, but you can just work hard at this job. You know what I mean? Like, if you're like job hopping for 3 years, you could have put in that work at one place, moved up, things like that.
Well, and also if you're job hopping for, say, 3 years, that's bad on the resume, and you're
100%.
less likely to get hired at the job you actually do want. So, like, one of the things I say, too, is, like, even if you don't want to do it, be the best at it while you're doing it. And that's the attitude I always took. I hated reviewing the NMLS numbers when I first got into mortgage. It was literally a spreadsheet, and I would have to go to NMLS Consumer Access, which is still the same exact website 13 years later. And I would have to check to make sure that they were active in the system because they had no way of doing it system-wise. And I did that all day. But my goal every day, there was one other person who was hired who's a friend of ours, and we would get half the list, and my goal every day was to beat him, like be first done. I hated it, though, and I was always done by lunchtime, and I just sat around the rest of the day, so they paid me not to do anything. But I didn't leave just in case we had some stuff come in and we could get it done early, whatever. But while I was doing that, then I would start – I remember asking, can I review guidelines? Where can I see the guidelines? And I would review guidelines while I sat there. And then – so I would do things like that, and I hated that job. And then I went into an underwriting role, and you can vouch for this. I hated underwriting.
Yeah, you still do.
I still hate it. Yeah, I don't like it. Like, I know the guidelines, but I don't like the actual process of the job. It's not for me. It is for some people. You can do it. Sarah can do it. I know a lot of people who can do it. I hate it. I did not like it. It wasn't for me. So I went ahead and did my best for like 4 or 5 years at that. And then I went out and started my own business, like, and went completely on my own, like said, screw it. If I don't make any money and I fail, I'm going to learn the lesson here. It's the best thing I ever did because that created the freedom. I worked hard at certain things. I learned certain, I learned certain, like, how to be a professional, how, because I think being a professional is very important. How to be a professional in a work environment. And then I learned when I made the jump to entrepreneurship full time and I wasn't answering to anybody, I learned true freedom. So I work more hours now, but I truly feel more free. And entrepreneurship isn't for everybody. Some people are meant to be a number 2, a number 3. Some people are meant to go to that corporate job. I was not. And I think you can vouch for that because you've worked with me a majority of my career. Even when I went into the sales side of mortgage and I had more freedom, I hated the fact that I had to hop on a meeting at a certain time because somebody told me to. I don't know if you've noticed this about me. I'm bad at keeping a schedule. That is because I'm just that, like, I have that quote unquote free spirit, but I harnessed the free spirit and did what I had to do to advance in my career. And if people aren't recognizing that now, and if this is a controversial statement, they probably won't be successful in their lives. Maybe they'll figure it out. They'll have to figure it out at some point, or they just won't make it. And it's not that they're gonna die. It's just they'll live in an average house their entire life and do average things. If you truly want greatness, if you truly want to be the 1% or the 10% or if you're top 20% income producer, if you want to be able to do whatever you want and be financially free, there are certain things you have to do to make a sacrifice. And we're going to talk more about this on our next episode because we want to talk about building wealth through real estate and some of the things that we're practicing. So that will be on the next episode. But it's not easy. Like, how many nights in the past 2 weeks have we been working till 11, 12 o'clock at night?
The last 2 weeks, most
and
nights.
We're up at 5:30 or 6:30 every day.
We were getting texted 2 a.m. I woke up and he was texting me at 2 a.m. this morning.
It's not easy.
It's
not easy. And, it's so funny to me that people don't think they can change their circumstance. I went from living in Amsterdam, New York, and an average life. My parents did well, but at one point they weren't. They had us super young, and money was tight. I don't look at my bank account anymore because I know if the money runs out, I just can make more of it. Like, now, with that being said, I also am not rich. Like, I'm not a millionaire, but it's a different lifestyle. It's a different neighborhood. And I earned it. And it's funny to me, and I talked about this in our sales meeting. I asked a question. I came in and I asked a question. I said, to the entire sales team, I started with a question. It's Tuesday. We do our sales meetings every Tuesday. I said, do you want to be rich? Do you know people were hesitant to say yes? That's wild to me. Like, do you want to be rich, financially rich? And they were hesitant to say yes. And it's because this world has gotten so soft that they make you seem like if you make a lot of money financially, like you're a bad person. You're not a bad person. The people who are trying to make you feel like a bad person are super self-conscious about their situation. And not everybody wants to be financially rich, but if you're in a sales role as a loan officer, you should want to be financially rich. You should want to be in the top 15% because that's what it takes to be successful at sales. But on the flip side of that, you providing your service here, guess what that does? That helps a lot of people achieve the homeownership dream that takes them out of it. So if you don't want to be financially rich, so by the end of it, they all said yes. Did they not?
Yeah.
But were they not hesitant?
They were.
You want to know what I said? I want a fucking Bugatti. And I don't feel bad about it. I want to make $100,000 a month myself, not including because I pay myself the same commission as we pay our salespeople. I want to make $100,000 myself just off my commission, not including what goes into the business, because I can. You know what I'm saying? And that doesn't mean I don't want to help people. That doesn't mean I'm going to take advantage of people. What do I say? The number one trait, and I said this on this podcast, high character individuals. So you can want that and still be a high character individual. I don't believe Jeff Bezos, one of the richest men in the world, is evil. I believe that he provided a lot of value to a lot of people, and he got what he was financially worth. I don't think it's a bad thing that college football players are getting paid. They're providing a value, and now they're getting paid. I think that we should get paid our worth. And your worth is not just because of who you are. Your worth is what do you provide to this world that you can make money on. That's your worth. What are you providing? That takes hard work. And you're not evil for being rich. You're not evil for having money. You're not evil for living in gated neighborhoods, driving a Bugatti. That doesn't make you evil. Now, do evil people do that? Yeah, there are some evil people who do that. But just because you're rich doesn't make you evil. And that's a mindset problem in this country. The same thing with educating yourself and changing your circumstances. But guess what, Donovan? People having that mindset, and I think it's the same amount of percentage. They just have more of a voice now because of social media. It makes it better for you. You want to know why? Because it's going to create less competition for you because they're going to be too busy complaining amongst themselves. Whereas people like us, who we see the comments, but we keep it moving. Do you think one of those comments has ever affected me? Like, oh, Nick's an asshole. Nick's a jerk. Like, he doesn't know what he's talking about. Keep commenting on my videos because you're increasing my following. And my following has increased by 25% according to your email, and which I believe, and I've seen it. So you're increasing my following the more you comment on my videos and tell me how stupid I am. I'm pretty damn stupid that more people keep watching me and subscribing to me. I am fucking dumb. That's all I got for everybody. That was my long-winded rant. I think a lot of that will be good for my personal social media, though. That's my brand building. That's my brand in a nutshell. Ben, you got to be more like me. Listen, everybody, thank you for watching. We have a lot to do. We have a lot to do. Follow my personal stuff. I'm Mortgage Man Nick on everything. You'll get to see my brand new hardwood floors that I'm putting in because I work fucking hard. I love y'all. We're out. NBI Financial Group on everything. If you haven't done it, go ahead, bang the subscribe button, turn on the notifications, leave a comment. Don't forget about the contest. Peace.